Good morning, ladies and gentlemen, and welcome to the annual financial results presentation of Capricorn Group for the 2020 financial year. I am Tinus Prinsloo, Group CEO. On my left, I have Baronies Hans, Managing Director of Bank Windhoek, and on my right, I have Jaco Estreizer, the Group's Financial Director. The 2020 financial year has been an extremely interesting year globally, and more so for us. To tell you more about it, Baronies will share some of the operational highlights, and Jaco will share the financial highlights with us. But before I hand over to Jaco, perhaps just some thoughts on some of the key highlights from the year as it impacted our key stakeholders. I think firstly, our core Namibian market was in troubled economic waters long before COVID reached our shores. Significant reductions in the interest rates across the region brought some relief for our customers, but also heavily impacted on the interest margins of the banks. We delivered good customer experiences, judging by our customer satisfaction scores and the net promoter scores, which were substantially higher than the industry benchmarks. Our employees are more engaged and committed than ever before, and I believe it's attributable to a leadership team that really listens and finds new ways of working. When employees are engaged, they collaborate better and go out of their way to solve problems, a capability that stood out in the way our employees responded to the COVID impact. As a group, we also contributed 5 million Namibian dollars to various initiatives during the COVID crisis to support the most vulnerable people in our communities across all three countries. So I think with that high-level context, I would like to hand over to Jaco to discuss the financial results with us.
Thank you, Tinus. Good morning, everyone. Yes, I will take you through the financials. We've included some beautiful pictures of our country to make the presentations a bit more interesting. We know that financial results can sometimes be a bit boring. Before I go to the financial results, I will highlight the two main transactions that happened this year, starting off with the investment in Capricorn Group. I think that's been well reported, where we've acquired a 30% stake in Paratus at the beginning of the financial year. Paratus Group operates in 6 countries across Africa, delivering services to 20 countries. It's a group that's doing really well. And also a sector, the ICT sector, that's actually have done well within the current economic conditions. So it's an investment that we're really looking forward to, the results from that, and also something that we're very proud of. Then secondly, also as recently reported, that we've just investing from our operation in Zambia. Our business in Zambia has been struggling to gain the necessary market share and scale to return to profitability. And we accepted an offer from Access Bank Zambia. Access Bank Zambia is a subsidiary of Access Bank Nigeria, which is the largest bank in Nigeria. And following that, we've signed a sales agreement with Access Bank. We believe that the transaction is in the best interest of the financial service sector in Zambia, where we bring 2 smaller banks together in creating a bank that will be within the top 10 banks in Zambia, also one of the best capitalized banks following the merger in Zambia. Following that, we have accounted for CAFMont as a discontinued operations in our annual financial statements. So the results that I will be talking to mostly exclude Zambia from that, because it's accounted for as a one-liner as a discontinued operation. If we move on and we look at our financial highlights for the year, I think it's a year that we can be very proud of given the economic environment, and I think it's results that we can be grateful for. From our continued operations, as explained earlier, we delivered our profit just contracted by 2.2%, which compare very favorably with competitors in Namibia as well as South Africa. But what stands out, I think, is the headline earnings from continued operations. Headline earnings is a real measure of results, where you take out one-off items, you take out capital gains, where we've seen a 0.8% increase in our headline earnings per share. On the balance sheet side, also good growth in our loans and advances by 5.6%, and the net asset value increased by 8.5%. Then also return on equity in excess of 15%, which I think compares very favorably with other competitors. And then a cost-to-income ratio that's within our target of below 60%. The group also declared the final dividend of 20 cents per share, which takes our total dividend to 50 cents per share. That results in a dividend yield of 3.8%. And coming to our dividend for the year, and also reported in our results announcement, there's quite a number of factors that we've considered in that. We had to find prudency and balance prudency in looking after capital and liquidity, considering requests from regulators, but also at the same time trying to deliver a fair yield to our investors given the low interest environment. If I then move on, just look at the last 3 year trends. We've also included the comparisons for this year with CAFMont in it. So that's continuous operations and total operations. This is an important slide to me, and I think it's really highlight why our results are different from other financial institutions, both in Namibia and in South Africa. Our flagship brand, Bank Windhoek, has been doing exceptionally well over the last few years. It's delivered really results that compares very favorably to their peers. And also in this year, the bank contracted by 9.6%, which compare very favorably to its peers in the market. But when you look at the group results only contracted by 2.2%. And that's really as a result of the diversification strategy that we've been driving over the last 2 to 3 years, where the companies that we've invested in has not been as affected by COVID-19 as our banking industry. And as a result of that, Intrepo has done well. Capricorn Asset Management has done very well, and reached the best asset under management they ever had. And also the investment in Botswana, where the Botswana puller is, because it's a basket of currencies and it's heavily weighted towards the dollar. Our bank in Botswana contracted by 10.7%, and if you convert it to Namibian dollars, because the puller strengthened against the Namibian dollar, it only contracted by 1.7%. So we have that hedge. So I think that diversification really came to the fore this year, and showing that that differentiated us from our competitors. COVID-19, yes, as everyone reports this year, it's been a significant impact on us as well, especially our banks, and especially Bank Windhoek, with the unprecedented rate cuts that we've seen, had an impact on our net interest margins and our interest income. So that almost decreased by 98 million as a result of that. Our non-interest income were down as a result of the lockdown periods, and where we've seen a decrease in economic activity. And then impairment charges are up quite significantly as a result of the economic overlay that we had to apply. So the COVID-19 impact on the group is around 288 million. And I will go into these individual lines later. If we then move on, and I will focus on 4 key areas in the presentation, which is mainly key focus for the group, but it's also, I believe, key focuses for our investor and analyst communities. And we'll look at liquidity position, our credit quality, our earnings quality, and our capital depth. Starting off with liquidity. Liquidity for us is of the utmost importance. It's the thing that we focus the most on. It's a principle with us that liquidity take preference over profits. It's the blood that runs through our veins. It's really the thing that's the backbone to business. And I think we also see it now in difficult times. We have companies with very strong balance sheets, but liquidity coming under pressure. So a key focus for us is our liquidity and our liquid assets. And the group managed to increase our liquid assets this year by 16.2%. That's really on the back of very good growth within Bank Windhoek, where we've seen liquid assets increasing by 24.4%. as the bank further de-risk its balance sheet. That also resulted in significant liquidity buffers for us. When you compare it to the minimum liquid asset requirements from our central banks, we almost have double the amount of liquid assets that the minimum requirements from the central banks is, which I believe position us very well going into this crisis. The growth in liquid assets is only as a result of good growth in our funding. both Bank Windhoek and Bank Gaborone had good growth in funding of 7% and 5.2% respectively. But I think what stands out for me here is actually where that funding came from. It's easy to grow expensive funding, but when you want to grow your more affordable funding, it becomes challenging. And that, I think, is a really strategy that Bank Windhoek drove, and I think is commendable both to our treasury team as well as our frontline staff in the branches, where we've managed to increase our current accounts and savings accounts by mid-20%. That resulted in a decrease in our cost of funding. So before taking into account the rate cuts, Bank Windhoek's cost of funding decreased by 47 basis points. We've also seen a slight decrease in our cost of funding in Botswana of 10 basis points. Because of the de-risking of our balance sheets and the growing our liquid assets a lot quicker than loans and advances, our loans to funding ratio has also increased, and it remains well within our target of 90%. If I look at credit quality, it's something that, as a group we're very proud of. It's something that we always believe differentiates us from our competitors. Our book has always been performing very well. I believe that the local decision-making powers that we have differentiate us. And also this year, we've seen good growth in both Bank Windhoek and Bank Gaborone and loans and advances, where the growth exceeded private sector credit extensions and increasing our market share. The growth is mainly as a result of growth in commercial loans, and then also in Botswana, where we've seen good growth in mortgage loans. And Trepo has also had a very good year, where they increased their loans and advances by 19% to 1.2 billion. If I look at our non-performing loans, like all banks, we've also seen an increase in our non-performing loans. Bank Windhoek's non-performing loans increased by 20.5%, and Bank Gaborone by 15.3%. I think if you put that in context with what the other financial services or banks reported in the region, I think it compares very favorably to that. That resulted in an increase at the group level of our non-performing loans by 19%, and an NPL ratio of increasing from 4.1% to 4.7%, which again compares very favorably with our market competitors. Again, I think we need to congratulate our credit teams both in Bank Windhoek and in Bank Gaborone with what they've achieved. I think our book has been managed very well, and I think congratulations must go to them. When we look at the impairment charges increase quite significantly as expected by 146%. But what I want to highlight here is the impact of IFRS 9 and the economic overlay that we had to apply. As you know, IFRS 9 is a forward-looking principles where we have to look forward. And given the current economic environment and the pandemic and the expectations it might have on GDP contractions, IFRS 9 requires you to apply an assumption-based overlay on your book. So it's not as a result of your book deteriorating, it's really a forward-looking and assumptions-based. And that almost contributes 45% of our impairment charges. That also then related into an increase in our loan loss rate to 76 basis points, and an NPL coverage ratio of 49%. I think I know there's more than just the analyst on the line, but I would like to just explain to the analyst here that there's a difference between how banks sometimes treat this. And when a loan moves into non-performing, so over 90 days, banks need to suspend interest, so you don't recognize that interest anymore in your income statement. But there is a difference in how banks treat this as part of IFRS 9. And where some banks take that interest as suspense for the year, and they gross up interest income and also gross up impairment charges, which then result in your impairment charges as an expression of loans and the loan loss rate being very much a lot higher than banks like us that don't do that. We don't gross up interest income and we don't gross up impairment charges. And just to show the analysts, I've now the integrated report back to front. I will refer you to page 220 of the 264 pages. On note 17, the second table, you will find the information there. If we then move on to our earnings quality, something that obviously has been very much impacted by the rate cuts that we've seen this year, 225 basis points cuts in the last quarter. in Namibia, and 50 basis points in Namibia has impacted us. And I think as most of you know, our assets reprice straight away, while our funding and our liabilities, only some reprice straight away, then some over time. And due to the nature of other liabilities, they never reprice. So there's a margin compression, especially when you see these unprecedented rate cuts, large rate cuts, that there's a mismatch between how your assets reprice and how your liabilities reprice. That resulted in a contraction in our net interest margin in Namibia, where Bank Windhoek's margin decreased from 4.6% to 4.3%. I think I also alluded earlier to our funding cost. That impact could have been worse if it wasn't for the active and very efficient management of our liabilities by the bank's management teams. Bank Gaborone has done very well this year in their margin, where they managed to increase their margin from 4.1% to 4.6%, resulting in a 31% increase in their net interest income. Moving on to non-interest income, and as reported, I think, last year, this is a key focus for us, and as part of our diversification, is that we really want to grow our non-interest income. This year, we've done very well in non-interest income, regardless of the conditions that we had to operate, where we increased non-interest income by 11.7%. It was a contribution of throughout the organization. The banks has seen good growth in FX, and I think congratulations must go to our dealers and our treasury teams, where we've seen good income from that. Also from our digital channels, where we've seen clients transition from traditional to digital, where we've seen an increase of 7.7% in our digital income. But then I think it's actually most of it comes from the businesses outside of our banks. Capricorn Asset Management has done exceptionally well, growing to an all-time high of assets under management of 31.3 billion, and the increase in the asset management fees of 14.6%. And then also in Trepo, that's done exceptionally well, growing non-interest income by 22.7%. As you can see on the top graph, the impact of COVID-19, how the transactional income dipped during the lockdown periods. But I think the good thing at the moment is that we see our transactional income getting back to almost pre-COVID-19 levels, and that we hope that will continue. Also the diversification, that our dependency on fee income is decreasing as a result of the good growth in the other types of incomes, and also the contribution to our total income improving, where we've seen that non-interest income last year contributed 40.2%, and that now increased to 44.5%. OPEX, and our expenses side, which is a key focus area in times like this, we managed to control expenses very well. Operating expenses increased by 3.4%. Salary costs or employee costs, it makes up 50% of our cost base, increased by 6.2%. That was mainly driven by salary increases that were granted last year, September, when our salary increase cycle is, and also an increase in our IT headcount, where we really want to build our capacity in our IT team as the demand for technology just increases. Technology cost also increased by 36%. That was mainly driven by license fees and also the impact of the currency, the weakening against the dollar, where most of those, or quite a substantial portion of that licenses are dollar-based. Operating bank expenses increased, and then at least there's some benefit from the lockdown, as where people couldn't travel, so we had a decrease in our travel expenses of 28%. Our cost-to-income ratio is, as I previously mentioned, remains within our target of below 60%. Then just on CAFMont, as I mentioned, as we signed the agreements and treated CAFMont as a discontinued operation in our financials results as a result of the sale agreements that's been signed with Access Bank. CAFMont had reported quite a big loss this year, but it's mainly as a result of a once-off items in this year. If you compare it on a normalized basis, it's more or less in line with the prior year. The big items in this year is the deferred tax asset that we had to reverse because of the transaction. The deferred tax asset is not, according to Zambian laws, transferable to the merged entity. And also before the transaction, we were on the table at the beginning of this current financial year, we undertook a restructuring exercise in Zambia where we reduced the headcount, and that also costed us 28 million. So all in all, if you take the CAFMont transaction into account, our return on equity would be 12.6%. Excluding CAFMont, So on the continued operations, that's 15.1%. Then lastly, looking at our capital depth, the group remains very well capitalized with significant buffers above the minimum requirements, and also our two operating banks having quite good buffers above the minimum capital requirements. So all in all, very good capital base. Then lastly, just at the contribution from our subsidiaries, we saw a contraction in the results from Bank Windhoek, as mentioned earlier. But if you take into account the COVID-19 impact on the bank had actually had a very good year up till March, before the lockdown period started. So if it wasn't for that, there would have been a very positive contribution to our results. And then a good contribution from Capricorn Asset Management, as well as Intrepa. And in other is mainly as a result of fair value gains that we've realized at group level, as well as additional interest income that we've earned. With that, I will hand over to Berenice to take us through the Bank Windhoek slides.
Thank you, Jaco, and good morning, everyone. I'll be talking very briefly on the Namibian economy, as well as the strategic and business context of Bank Windhoek. And lastly, I'll finish off with some highlights in terms of our financials. If we look at the Namibian economy, over the past 3 years, we've been under severe strain as a result of the recession. This was then followed by the onslaught of the drought in the previous financial year, and this has further been exacerbated by the onslaught of COVID-19. It's needless to say that businesses and individuals have been under severe strain, and we've also seen a significant reduction in business activity, especially towards the end of the last quarter of our financial year. Furthermore, we've seen, as Jaco and Tinus have both mentioned, substantial interest rate cuts over the last quarter, and this is translated into the lowest repo rate recorded, which furthermore impacted prime lending rates, and as well as, if we compare in the region, for the first time, we have seen Namibian repo being lower than Namibia and South African repo rates being lower than Botswana's repo rate. Despite this, however, we've seen the demand for credit continue to slow down, and as at the end of June 2020, private sector credit extension reduced to 2.8%. What's even more concerning is that business credit contracted by 3.6% year on year, and we were quite surprised by this given the low interest rate environment, certainly something that we need to focus on in the year going forward. We've also seen that government debt, the government announced its borrowing plan, and it will be coming to market in the next few months to raise about 10.4 billion in debt. But in a nutshell, the pressure on our economy has been severe, and we have definitely experienced some of the toughest times ever in the history of Namibian businesses and consumers. Now, going into some of our strategic context, our vision is really the bedrock on which we are building a responsible bank. The vision of Bank Windhoek is to be a leading bank that provides sustainable value to all our stakeholders. We aspire to be a catalyst of sustainable opportunities and a business partner for growth. We drive progress in the communities that we operate in. And our vision has been delivered through our strategy. So for the purpose of today, I'll talk to the strategy impact under the categories of customer, community and environment, employee, performance, and business fundamentals. If we look at the highlights for 2020, it's against the backdrop, as I said earlier, of a very difficult business environment. We continued in terms of our customer space, we continued investing in renewed customer solutions in our choice segments. This has yielded very good fruit, especially when we look at the launch of our Select Gold offering. The Select Gold offering was very well received during the past financial year. And we've also seen stellar growth in our private wealth offering. Furthermore, during the past financial year, we've onboarded 31,000 new student accounts as part of our NSFAF partnership. These accounts have yielded very good contributions, and we've also seen very good growth in our check and savings accounts balances, as Jaco mentioned earlier. We are also excited about our new product, which we've launched towards the end of the financial year, and that has been a 30-year mortgage loan. What really excites us is that we are able to make available housing finance to first-time homeowners who may never have had access because of the cost of financing or the, I suppose, the installment of financing a house. So this is really allowing financial inclusion, but also access to owning your own house. In terms of our community and environment, we've pledged over the last few years 1.5 million towards our COVID initiatives, but furthermore, we've also invested 3.5 million in various projects which we manage through our social investment fund. We continue to support the Cancer Association, and this is mainly through our signature project, the Bank Windhoek Cancer Apple Project, but also we've continued to drive the focus on sustainability through our renewable energy projects and financing of those. We've, in the past financial year, been very privileged to be able to launch our first ever green bond. This green bond has been fully dispersed, and also we've been able to disperse all of the funds made available by the AFD towards renewable energy projects. We really see ourselves as differentiating ourselves in the space of renewable energy and building expertise in sustainability finance over the next few years. From an employee perspective, we believe that everything stands and falls by leadership, and therefore we've invested extensively in our leadership development to the tune of 80 people, 80 leaders that we've put through development training over the past financial year. We've also improved our staff engagement index, making sure that our staff are connected to our vision and serve our customers with passion, and we're quite delighted to see the results of our labor during the past financial year. Lastly, we've looked at our leadership team, our executive management team, and we were able to move key executives into strategic roles, as well as bring on board new talent. And this has really solidified our team and built more depth at a top leadership level. In terms of business fundamentals, we believe in laying a strong foundation. Jaco has spoken to some of the elements of our business fundamentals, such as our liquidity and the de-risking of our balance sheet. Now, the de-risking of our balance sheet was mainly achieved through the improvements that we drove in terms of our loans to funding ratio. We've also introduced more stable funding, focused on the right levels of capital and liquidity, but furthermore increased our access to contingency funding by 30% over the last year. In terms of our credit process, it has been important for us to build resilience, especially in our collections team, as far as our legal collections branch is concerned, to introduce new skills into that environment and to overall enhance the analytical abilities in that space. Now, this takes me to my next slide, which is really dealing with our balance sheet. And our business fundamentals really play well into our balance sheet. If we look at the balance sheet strength that was built over the last year, as far as market share gains were concerned, we were able to gain market share both in our loans and advances arena, but also as far as deposits were concerned. We also introduced, as I said earlier, a healthy portion of stable funding. We've improved our CASA ratio, which is our current account savings accounts ratio, and as you will see, both current accounts and savings accounts balances increased north of 20%. We've also been able to still see growth in our loans and advances book as far as the 4.9% growth is concerned, and that is against very low private sector credit extension. Our capital has improved, our capital ratios have improved, but as was mentioned earlier, we certainly felt the impact of COVID-19, and that was quite pronounced in terms of our NPL book, where we have seen a deterioration year on year from an NPL ratio or non-performing loans ratio of 3.8% to 4.3%. Now, moving on to our statement of comprehensive income. The benefits of a diversified universal banking model has served us well in the current financial year, and we see that this will carry us going forward as well, just in terms of that diversification and the focus on our choice segments. We've seen very strong performance, as Jaco has alluded to, during the first 9 months of our financial year. This was followed by an abrupt slowdown in April as we entered into our very first and quite extreme lockdown. But we did see, on a very positive note, strong recovery towards the end of the financial year, with very good results posted still in June. Now, if we look at some of the key indicators, our return on equity has declined to 15.2%. We have seen the impact of the rate cuts on our net interest margin, as was mentioned earlier, and we did see our credit loss ratio double over the period under review. Overall, our profit after tax reduced by 9.56%, but we do believe that this compares well with industry benchmarks and with our peers in the region. Now, in terms of our COVID response, as a responsible corporate citizen, we believe very strongly that we have a big role to play in partnering with government and with the private sector to make a positive impact even in these very difficult times. From an operational perspective, we spent about 3.2 million over the last 3 or 4 months in terms of just investment into protective equipment for our staff, but also funds made available nationally to assist with the fight against the COVID pandemic. From a customer perspective, it was very important for us to ensure an uninterrupted service, and we were quite able to achieve this through operational resilience built, and especially the ability to implement and execute on our business continuity plans. Furthermore, we facilitated payment holidays to the tune of 1.8 billion, and this was to relieve our customers of the pressures under the current environment as far as servicing debt is concerned. Lastly, it was quite positive for us to see a 61.4% increase in the number of our customers that only use our digital services. Moving on to our most precious and valuable asset, our employees. Our employees, through their dedication and diligence, really allowed the bank to adapt to the new normal that was brought about by the COVID-19 pandemic. What has been top priority for us is the health and safety of our staff, and we have invested in making sure that at all times our staff are safe and that they have the right tools to protect themselves during this time. Furthermore, we were also able to de-densify our workplace by ensuring that teams were working remotely, but also that we continuously explore new ways of work to de-risk our environment, especially from the spread of this disease, and to ensure that we contain the spread of this disease in line with what our government is driving. Lastly, we've also made available counseling and emotional support to our staff during this time to make sure that people are being attended to and that they are getting the right support to weather the storm. From a community perspective, as mentioned earlier, we've invested 1.5 million in national initiatives to support our government in the containment of this pandemic. This was reflected in our sponsorship of the City of Windhoek COVID awareness campaign, and furthermore, we also procured COVID test kits, which we then donated to the Ministry of Health. Lastly, we facilitated the payment of more than 120,000 income grants provided by the Ministry of Finance through our Easy Wallet product. In terms of business fundamentals, the focus continued in terms of just making sure we're building balance sheet resilience. We also introduced stricter measurement and monitoring measures in our credit space. And lastly, the protection and the preservation of our capital was key. And this was achieved through restrictions that we applied both to our dividends as well as to our bonuses that were paid out for the previous financial year. In terms of the year ahead, we do expect that this will be one of the most difficult years in the history of the business environment in Namibia. We do believe that through disciplined execution of our transformation agenda, we will achieve what we set out to do so. This is not the time to be blindsided. Furthermore, we do not believe that we should compromise the future for the present or sacrifice the future for the present. So whilst we are positioning ourselves to tackle and to overcome this COVID onslaught, we are at the same time investing in the future in the form of investment in technology, investments in growth, and keeping our eye on the ball in terms of overcoming these tough conditions. Strategic transformation will be driven in terms of our distribution operating model with customer centricity at the core of this change. This will also be enabled through digital technology and lastly, capacitated by future-fit leadership, skills, and talent. We've also redefined our core business units and dedicated the focus to our 4 customer-serving units, which are namely retail banking services, corporate and institutional banking, business banking, and treasury. So we've moved away from 3 core business units to 4 core business units for the future in terms of how we will participate and compete in the market. Furthermore, we continue to focus on the simplification of our business through taking out cost, but ultimately, the goal is to reduce the cost to serve our clients. We strongly believe that building a foundation in these times continues to take priority. We will continue to focus on business fundamentals that include liquidity, capital, credit risk, operational risk, cybersecurity, and so forth. In addition to that, our social purpose is very much part of who we are, and we are going to continue embedding that into our DNA, making sure that Namibia is better off because we are a business in this country. We are well positioned to capture the opportunities presented even in these difficult times. Our entrepreneurial ethos and our tenacious spirit requires of us to continuously seek opportunity even when times are challenging. And we're quite excited about our COVID-19 game plan to continue looking for opportunity and responding to opportunity in these very difficult times. Lastly, we recognize that we provide a vital service and play an important role in this country. People are depending on us. Despite the challenge and disruption which has been created by this pandemic, we have a shared hope that if we best leverage the things that we are most certain of, we can rise above these challenges with a new spirit of collaboration, connectedness, and community that will benefit society, business, and the economy alike. We can overcome together. Thank you very much. I'll now hand back to Tinus.
Thank you, Berenice and Jaco. Our purpose as Capricorn Group is improving lives through leadership in financial services by being connectors of positive change. The next year is going to be tough. However, we look forward to support our clients to recover and grow during the year ahead, where we can and where we are able to. We also focus on our other stakeholders, and we will actively engage with them, and especially the investor analysts, the shareholders, and the media in the next few weeks, while supporting our staff to deliver excellent service. In support of the vulnerability communities and the sustainability of the group, we also launched the Capricorn Foundation on the 1st of July, and we look forward to the contribution that that will make. Our integrated report is available on our website already, and we will be able to provide you with more details on what was presented today. I also want to take this opportunity to express my heartfelt appreciation to all our Capricorn citizens for their resilience, dedication, and hard work during these tough times. I would also like to specifically thank the leadership teams across the group, both subsidiaries and associates, who provided the necessary guidance and motivation during the year to stand together and support their teams with wisdom during these unprecedented times. And lastly, I would also like to thank the board members at all our group subsidiaries for their contributions and constructive and courageous debate during the year to ensure that we deliver above expectations. And I think on that note, we will go into some questions after the two videos from Bank Gaborone and Bank Windhoek.
Let's take a walk together through precious milestones lined with fear and uncertainty. You learned, you bonded, celebrating life's little victories whenever they came along. You practiced over and over and over again, pursuing perfection, persevering through hardships, never losing sight of your vision, your dream of a better world, building relationships for happily ever after, shaping a brighter future for all together. No matter your journey, we are here with you every single step of the way, because yours is a relationship worth banking on. Bank Windhoek, a member of Capricorn Group.
Most of us had big plans for this year, like other normal years. But little did we expect that the goals for normal would shift greatly in 2020. Despite the confusion of the world closing shop overnight,
that old tractor is the least of our problems. I don't know how long these guys will survive in this cold.
life still goes on, presenting us with new problems to solve, whether we're ready or not. So we do what we know best. We innovate.
I have an idea.
At Bank Gaborone, we want to help you turn that spark of an idea into something greater.
I'll take 100.
Let the Bank Gaborone app help you bank easier.
Yes, you have me correctly, 800. No, deliver to Gaborone, Botswana.
Set your card and EFT limits to manage fraud, make online payments to local and international suppliers, transfer money between your accounts and to other banks, while you pay for your DSTV, buy airtime and electricity, all from your own small corner of the world. Don't be left out in the cold.
It's freezing.
When you have to plan for the new normal.
That's why I'm wearing my winter shorts.
While you're still learning to do things as simple as saying hello. Download the Bank Gaborone app today on Google Play for Android or the Apple App Store for iOS. Join the tribe of the financially free. Free to be, free to bank. Bank Gaborone, a member of Capricorn Group.
Thank you and welcome back. We've had a few questions that we'll answer. And I think the first one that we received was, how does the profit of 856 million benefit the Namibian community at large, especially during times of COVID? Now, to a large extent, to give some context to that, it's important that the role that banks play in the community is understood. And that is a continuous process where the banks provide a fundamental base that establishes a platform where investors, the outside community, can also evaluate the health of the economy of the country. And by making profits, you also give a lot of confidence into the society where they can safely deposit their money, that it's not going to be lost. By making profits, we also contribute actively to the taxes to the government, which can then reinvest it. We are able to demonstrate our ability to attract deposits which we can lend. At the end of the day, the biggest role that the bank plays is not so much lending, but a deposit-taking institution where people can safely deposit their money for future use. And by making the profits, we are also able to contribute actively, as I said earlier, at a scale into the community through the Capricorn Foundation, through paying taxes, through paying salaries and creating jobs. By helping clients to survive this COVID pandemic, you are able to put back a lot into the communities and thereby ensuring a more sustainable economy as a role player in the bigger community. And it's also not just Namibia. We are also then able to invest into other countries and carry the Namibian brand across borders into the region to help grow and become a regional player. So I think on that one, perhaps I'll hand over to Jaco.
Yeah, okay, thank you, Tinus. Yeah, there's a question about where will the new growth come from for Capricorn Group. So at least we can talk about growth. I guess that's most companies even just talk about surviving at the moment. So I think in this environment, you know, that's why this slide where I talk about the diversification was so important. You know, the bank will be impacted. You know, you don't have 275 basis point rate cut and not have a significant impact on your margins. That's just, we're going to be impacted like most other banks. But what differentiates us is the fact that we're diversified. We're not just a bank. And we have businesses that are doing very well in times like this. So, you know, we talk about Paratus, the ICT sector, and the Paratus Namibian Group will also in the next week or two announce its results. And you will see what, you know, how that business is doing. And then also Paratus Group into Africa. You know, the ICT, the demand for fiber, the demand for data is just growing. So I think that will be a driver. Then also we've done very well in asset management. Our Intrepo has been doing very well. And also Bank Gaborone. You know, that bank has been growing their market share year on year. And I think something that differentiates Capricorn Group is the management teams we have. We've got really very, very good management teams at our subsidiary levels. And I really believe that that local decision-making, that power that we give our subsidiaries can differentiate us and will bring growth. And I think lastly, for the group, you know, we've been expanding and diversifying over the last 2 to 3 years. And growth is one of our key focus areas for the next strategic cycle as well, where we're really going to look at further diversifying and investing in additional businesses. So yes, it might be a difficult year ahead, given our dependency and the big contribution that Bank Windhoek contribute to the group. But I think from a group perspective, at least, we have that diversified business, and we have the opportunity to further diversify. So I think that would be my answer to that. Don't know if there's anything that Tinus, Bernice, you would like to add to that.
I think that you've captured it, you've answered it well and captured it well. If I can then continue with the next question, which really asks, how does the universal banking model serve the bank? Now, just as Jaco has mentioned, if we look at diversification, there are benefits in diversification. And certainly from a bank context, a universal bank talks to a bank that serves multiple segments. In our context, that means we serve corporate clients, we serve retail clients in the form of retail affluent clients, the retail mass market. We also serve our private wealth clients, our SME, and our commercial segments. So that in itself provides diversification, and this diversification allows us to have the benefits of what we would call a portfolio effect, where one portfolio is under strain, the other does well, and that creates a good balance in our book. And we've also seen that play out into our non-performing loans ratio, as well as into our credit provisions. But it also provides opportunity for growth in various segments. So some banks in especially other countries may only focus on a niche segment, which means they only serve commercial clients or SME clients. But whereas what we present is more of a universal bank, and as I've said, we serve multiple choice segments, and we make sure that we offer these clients best-in-class solutions. Thank you. Thank you, Tina.
Thanks, Bernice. Yeah, I think perhaps the last question that we had is, will you continue to support vulnerable communities post-COVID as the culture weakens in our communities and it will not change overnight? And I think that's perhaps what I'd like to maybe reiterate is the launch of the Capricorn Foundation is really the platform through which we can continuously support the communities and look at food sustainability and continue to contribute, because I don't think we'll solve the vulnerable communities overnight as it stands. And we'll also call on other stakeholders in the environment to help us in that role. So over time, that will be sustained. And I think then lastly, we also had some comments. Strong capital position, Woza Bank Gaborone. And yeah, Capricorn Group, I salute you for assistance and care of staff through COVID-19. So thank you for those comments as well. So ladies and gentlemen, I think on that note, I would like to thank you for your participation, and we look forward to engaging further, and I trust you will all have a good Friday. Thank you very much, and thank you for Jaco and Bernice for your contribution.
Thank you, Tinus.
Thank you, Tinus.